we're in conversation with the Managing Director and CEO of Aditya Birla Sun Life AMC, Mr. A. Bala. Thank you so much for taking out the time and speaking with Moneycontrol.
Thank you, Nikki, for having me part of your discussion.
Lovely. We'll just start off by asking you about what do you think, what are your expectations from the overall budget, especially because it comes amidst a year ahead of the election. What do you think will delight or disappoint the market?
I think the way I see the way the government has been driving the last 3-4 years to support the economic growth in every possible way and focus on increasing the tax collections again every possible way. I think both of them are actually going quite well in building the nation to the next level of growth path. Therefore, this budget, in my own belief, would be a growth-oriented budget with rightful of with reasonably good amount of money being allocated towards Capex, which is called the capital expenditure. I think it will continue to remain very, very strong. And second, the government would also bring in some element of higher aspirational numbers with respect to the tax collections, given the fact the government has been improving the tax collections month on month, both on direct tax collection as a GST. Definitely one of the aspiration is actually to improve the tax collection efficiency in the system. That also will remain one of the big area of budget number I am saying. But otherwise, broadly the budget should be growth oriented budget. And given the fact that India has been doing a lot of stuff in driving the growth, whether it through the PLI scheme that they introduced last year, about 2 years back, making India as a manufacturing hub, especially at a time where China +1 is being needed, Europe +1 is being needed in the global market. Therefore, India is getting prepared very well. And last but not the least, even during the Russian war crisis time, India did not get affected as much as one would have expected to be. And given the fact we had the advantage of getting oil at certain good prices, therefore, that also had its own impact on the inflation, not going up as high as what you have seen in the Western market. As a result of that, even interest rate in India remained more or less, though we have also seen interest rates going up, but broadly the interest rates in India did not hurt the borrowers or did not hurt as much as could have happened in the global market. So all these things actually go very well from a broader economic point of view. Therefore, the budget would be more in the nature of boosting the morale of boosting the confidence rather I would say of the economy, the investors, by doing the right allocation towards driving the growth in the economy.
Sure, we'll get on to the allocation part a little later, but first I'd want to understand from you, what do you think will be one key announcement that could either delight the market or disappoint the market?
So I think what could delight the market definitely is the way how you put your the growth aspirations on board and bringing in right level of resources for that. That's something will definitely the market will like it. At the end of the day, what could drive the economic growth is actually the Capex, whether it is for private sector or public sector. I think that could remain one of the key driver on the positive side. On the negative side, I think having seen a reasonably smooth ride for Indian capital market and any steps that is being taken more related to taxations, and if it is not understood properly, it could potentially act as some negative for the market. But my own belief is the probability of rather the overall component of the budget would be more will be more towards keeping the sentiment intact and continue the buy-ins that they have created, given the fact that India needs one lot of capital flows from an equity market point of view, and Indian companies are reasonably doing very well so far. Therefore, they continue to keep the momentum. And the private sector Capex would also be encouraged more and more, and given the fact that so much of spending coming from the government need to also get backed up by the private sector Capex that is coming in, given the fact price levels are more stable and growth aspirations will continue to be driven, then naturally private sector Capex also should come. Therefore, the broad budget, my own belief is it will be more keeping the positivity in the market even post budget. I would assume that's the path that the government may take.
How positive is the sentiment right now as we go ahead of the budget? How different is it from the previous years? Do you see a difference in the sentiment? Also, I would like to understand from you, how are you looking? You've spoken enough and more about the themes maybe Capex and Make in India, anything that you think will break or undo, bring in the negative sentiment for the market?
So I think negative sentiment, my own belief is I don't think it will come so much from India, given the fact that, so one of the area I'm quite happy is that we are doing a lot of things right. And we are also not doing anything in a hurry. If you do a lot of things right, but do it in a hurry, it will have an impact. So I think we are doing the right balance in that we are doing. That we are doing things right, but not doing in a hurry.
What things are we doing right?
Whether it is basically the broad policy framework, making it easy for doing transactions, making it easy for the kind of the kind of plan that you are making in terms of the various schemes that your government has been coming out in bringing in right level of competition among the states, so that the government spending continues to remain in every area possible, so especially in the public infrastructure building. I think the government is doing a lot of things right. And ultimately, these all will actually create right ecosystems. I think once the right ecosystem is created, then naturally the beneficiary is going to be you and me as a citizen of the country. Second is the consumers, and third is actually the small scale business enterprises who participate in the whole ecosystem. They also become beneficiary, and of course, it also added with the agriculture economy doing better, and I think all will go well. I think that's why I'm saying a lot of things are being done right from the point of view of driving the economic growth. I mentioned about tax collections earlier. I think each month is increasing that itself. I think one of the area that I think we can do a lot better if the more compliance, the more people actually have a fear that I have to pay better. I pay the tax rather than evading. That mindset itself coming in, therefore you become more compliant. Itself will actually take the bar high. In terms of, that's my personal belief is if the compliance improves, actually the bar goes up high. So these are the area where the government is also doing a lot of things right. But simply not in a hurry, I said. The hurry I said because of the moment you start pushing things too fast, there is high probability that somewhere it can get breakdown. It can broke down. Therefore, as a result of that, we may feel it's an accident. That's why I'm saying. I think the risk will not come from inside. I think risk could potentially come from outside, given the fact that if there are two economies, which is one U.S. economy have gone through a tough time.
Right.
The last 1.5 years, they have gone through a terrible time in terms of significant valuation for investors, and close to about 10 or 12 trillion dollar of loss in assets, both in the stock market as well as the bond market, both. Whereas China is one, 2.5 years after pandemic, I think this one economy have gone through a terrible period of time for the last 2.5 years. The question would always be, if they realize that their economy is such a powerful economy, have to come back, therefore they need to stop worrying about pandemic related impact, and they start worrying about economic growth coming back. If that comes in, then naturally from a global investor's point of view, one or two other destinations which otherwise India had that position from investment destination point of view, that could come more favorable for some other economies. Therefore, the risk may not come from India, the risk could come from global market.
Sure. Speaking about taxes, because you spoke enough and more, maybe more compliance is needed with terms of taxes, but government is doing a gradual but slow job. Don't you think that any of that needs to be adjusted keeping inflation in mind? Because if I'm spoken enough and more when it comes to the middle class taxes, right? Enough and more has been read and said about the taxes that has been imposed on the super rich category, which probably is the highest in the world that we have. Don't you think any of that tweaking with regards to that on a personal level and a little bit of tweak on LTCG level will do some good to the markets?
See, there are expectations. I think market always gets built on expectations in the pre-budget and post-budget. Everything will of course be known actually whether your expectations have been met or not. Of course, at this point of time, the market is having some kind of feeling that LTCG may get adjusted. There is a growing feeling that 1, 2, 3 kind of tax, which is 1 for equity, 2 for real estate, and 3 for fixed income, they may become on one tax with a 2-year or 3-year kind of thing. That's one expectations are there. And second is there has been expectation there will be a minor tweaking on the short-term capital gain tax. But the question, I think government, I am sure, will ask the questions. Whatever tweaking I do, how much actually is going to add to the overall kitty of the government? I think one of the area where my own belief is our current finance minister is taking most of the decisions on the basis of data. And if anything that it does is not going to have a significant contribution either to the tax collection or to the exchequer in whichever form it is, my own assumption is they will not touch it. I think the finance minister is very clear about bringing in better understanding I think, easy way of interpreting. I think you cannot interpret, you interpret different way, I interpret different way. She doesn't want to give any kind of what do you call the chance to people to interpret differently because you are different, I am different. So you want to have uniform interpretation for everybody. Having said that, at the same time, if the contribution to the exchequer is not going to be significantly higher, I would assume they will not tinker with anything which the marginal tinker with no significant impact for the government can only do damage to the market sentiment, which my own assumption is they may be looking at this very, very carefully on these lines.
Okay, so you don't expect tweaking clearly coming in on LTCG, but on personal taxes, do you expect any changes to take place, especially because FM has spoken enough and more about middle class taxes well ahead of the budget also, which comes just a year ahead of elections. So don't you expect any kind of populist measures coming in on there?
So I don't think, see, I think populist measures in general seems to have become a history. I think I have been watching the budget for the last almost 7-8 years, and the new government has been presenting. I think none of the budgets I would say is a populistic, and even the social scheme that is being announced, while it can be considered as a populistic from a definition point of view, but from the outcome point of view, they are not populist. They actually driven the sentiment, growth, the spending at the middle class level.
Precisely.
Therefore, I would assume this budget, rather than being calling it a populist, maybe they can probably give some kind of tax benefits to the middle class income taxpayers or salary class employees, given the fact the more money in the hands of middle class people, income people, could potentially drive the spending.
Right.
It can drive the spending. The moment the spending increases, it has a lot of cascading impact on GST going up, and so on and so forth. The multiplier impact of any benefit that you give to the income taxpayers, I think could be quite significant. So I think I would assume this budget government may consider some bit of tax benefits, either by tweaking section 80C, because 80C is the one where the 1,50,000 rupees being now saved. All the limit is actually all scheme put together is 1,50,000 rupees. So there is a high probability the 1,50,000 rupees can go to about 2,50,000 rupees. And given the fact that one side you make your investment and save, at the same time you save your tax, and that tax could also be used actually for the purpose of spending. Therefore, the government may probably be more liberal in reducing the tax incidence for middle class income players. Of course, the rich, they may not even bother so much, given the fact that if somebody has to pay a tax for somebody else, right? So therefore, whom do you cut? Will you take the actually tax cut for rich, or will you give a tax for the middle class income taxpayers? I would assume where the mass is there, that's what they may give the benefit. Though it can be seen as a populist, my own terminology is not a populist. It is going good for the
economy
savers
and
the economy in general. Yeah.
Okay, so you are expecting a makeover to take place for ATC overall, just to kickstart or rather boost the spend out there, which of course I think will also have its benefits to the housing sector overall, right? And also I'd want to understand one more thing. Overall, from the mutual fund industry perspective, are you expecting any kind of tax parity for the mutual fund industry at par with the insurance, or for that matter, even the listed bonds?
I don't think so. Of course, mutual funds, the way is most tax efficient, no doubt. Fixed income schemes are very tax efficient compared to fixed deposit. And given the fact that mutual funds have been playing a very big role in the bond market in terms of development across the rating curve, I would assume they will not do anything as far as the mutual fund concerns. And given the fact that the current interest rate where they are, in the next 2 years or 1 year, 1.5 years, we will find more and more flows coming into the fixed income schemes, which in turn help in giving another source of financing for the needy corporates in the country. Therefore, and the bond market need to also get developed over a period of time, which has been one of the long pending agenda both for the government as well as for the regulator. Keeping this in mind, I would assume they will not tinker with any taxation related to the mutual fund asset class, and they will probably add more instruments which could actually be one of the savings tool for the consumers at large, which I think savers at large, I think could probably come. But I don't think it will come at the cost of anything mutual fund. Mutual fund, I think there is a greater realization with both of the government as well as the regulator. In general, most of the influence in the country do believe mutual fund done a great job in terms of providing the much needed support to the stock market stability. At the same time, channelize the savings of the customers or the investors into the capital market through the mutual funds. I think it's one of the best periods that I have seen, and still have more good period to come in the years to come. And if at all we have to become like US market, where the mutual fund dominates the US mutual fund, US capital market, and Indian mutual fund also can dominate the capital market by becoming larger and larger in the times to come. So that realization definitely is there with the government. They have seen the power of how mutual fund can play a role of stability in the capital market.
Right.
Yeah. Therefore, they will not touch anything with respect to the mutual fund taxation concerns.
Fair enough. Also, at this point of time, how do you see the asset allocation, right? Where do you think, which pocket seems to be fair at this point of time, especially given that we're in the rising interest rate case scenario? Do you think something like a fixed income would do better than equities?
Yeah, on a relative basis, it appears that fixed income will do better. See, equity market has been running quite a lot. I mean, last 2-3 years, equity markets have done well, and earnings yields have been shrinking because the prices have been rising.
Right.
But earnings can only go up to so much, especially when the economy is growing about 7.5%. Right. But the earnings yields comes down, say about 2.5%. The bond yields goes above the earnings yields. Naturally, as an asset class, the fixed income asset class become a superior asset class over the equity asset class.
Exactly.
That doesn't mean it comes at the cost of equity in general. You completely ignore it, because this is for long-term investing. This actually is a situational investment that we can call it. Today, it's favorable for fixed income. Therefore, our own belief is in the year 2023, you will see some asset shifting happening incremental basis to fixed income, given the fact that rates are good. At the same time, we also believe that gold and silver as an asset class could also do well this year, given the fact that US dollar has been weakening for quite some time, and I think it's been strengthening rather, and other currencies have been weak, and we will probably see in the year 2023 US dollar becoming weak and other currencies becoming stronger. So therefore, I think both gold and silver could become one of the dollar-based assets. Demand could also come. If US gets into recessions, you will also find people moving towards gold. So that could also expected in the coming year. So I think if you look at an overall basis, yes, fixed income and gold and silver could be one of the asset class need to be considered. These 2 or 3 asset classes need to be considered compared to the equity as an asset class. But equity is something I call it as an accumulation stage. Equity is something we cannot ignore it, because equity always market will give you return in spurt. It will give you 1 year, it will just give you a spurt which otherwise would have taken almost about 5-6 years to generate.
So this year doesn't seem to be that year for equity.
Yeah, it doesn't give a spurt market, but I think overall buy-ins and sentiment remain reasonably okay, with the least amount of volatility on the downside. We don't see a crash coming in, given the fact broadly the economy is very stable, and therefore crash may not come, but at the same time the return differential could be a little better in the other 3 asset classes compared to equity. So we believe that year of consolidation on equity, accumulation of equity for long-term point of view. At the same time, our part of asset allocations consider fixed income and gold and asset class also as part of that. That's why asset allocation fund plays a very key role in the overall scheme of thinking.
Fair enough. If we are just supposed to stick to markets, as gold as an asset class is more attractive in this year as compared to equities, I get that. If we are just supposed to, focus and narrow down our focus to equities, what do you think will be the themes for this year? You think, are we looking more of cyclicals, more of inward-looking companies rather than the ones which are export-oriented or cyclical in nature? What's your, view on this one?
See, our own belief is the domestic-driven companies, I think, will continue to do well, such as banking and financial services, because credit growth in the industry has been close to about 30%. The demand for credit has been rising. And
PSU
in general,
or private for that matter, which looks better in terms of the fundamentals?
Both are of course doing relatively better. At the same time, public sector banks also are now beginning to capture the growth quite significantly on the retail segment. But I think private sectors also continues to see a growth which is in excess of about say 18 to 20% kind of rate of growth that we are saying. I think it will be a mix of both. Of course, the market always rewards where the valuation is relatively cheaper. Therefore, we may probably see public sector owned banks could do relatively do better than the private sector. Right. But it's always catch-up game happens. That doesn't mean this is bad because it's going up, and that catch-up game happens. But otherwise, broadly, if you see.
But PSU banks have been outperforming private in the previous year. You expect that trend to continue even for this year?
They will be much more stable, much more much more what do you call it could come in demand. But of course, everything comes at a price at which you price at which you buy, and one has to also assess any potential risk that could come on basis which you have to analyze it. But having said that, I think overall as a sector, I think will remain one of the key theme. And second is capital goods sectors, given the fact that Capex will going to be continuing both from the government spending as well as the private sector Capex coming back. We'll probably see Capex, capital goods sector should do well. And third is actually domestic consumption, we should see it picking up, especially service oriented business which has got huge bearing on the economy, local economy per se, such as the hotel industry, hospitality industries, even tourism as industry should pick up. This will have a direct implication on both on the consumption as well as companies in that space. I think broadly I see domestic consumption focused pickup could come, which of course reflect on all these sectors, and capital goods sectors will be the one of the beneficiary, given the fact that the Capex cycle, both from the public sector spending point of view and private sector also, could gradually come back.
Fair enough. Also, let's talk about the global scenario overall, because we're seeing a lot of geopolitical tensions playing out. We're seeing at one point of time Fed is probably looking at the rate hikes, probably slower in this year. I'm going to ask you about that as well. And also we're looking at a global recessionary fear. So there are a couple of elements playing in the global setup. How are you looking at these?
See, the way we see is, I think Fed has been quite aggressive this time in rising rates. I think we have never seen 70 basis point kind of scale of hike. And obviously, they have kept the interest rate too low for too long, and then inflation came and hit, they didn't have much choice but to do the correction which otherwise they would have done in the past. Right. So now having seen a corrections, and also given the fact that US economy off late job loss have been rising. So far, one of the silver lining for US is the job market. Job markets are very good, unemployment rates were not going up, and they were very much under control. On the contrary, unemployment rates are coming down. Now suddenly we see actually job losses coming in. If one has to go by what Google and Apple and most of the people have done in terms of cutting their jobs, cutting the number of employees in their firms like Amazon. See, all of them will probably start reflecting in the next few months in terms of the unemployment rates which increases. Then naturally it can be seen as a signal for growth stopping it. So which essentially mean from a Fed point of view, they may probably have to stop the rate hike cycles, or they may increase it by only 20 basis points and stop it at that. Right. So that I think could happen. Probably we see in the year 2023 the rate hike cycle peaking out. So which could happen both for India as well as in US. At the same time, US economy continues to see some kind of job losses, and I think the pickup in general on US economy, as we have seen in the last 3-4 months, if it comes under a question mark, then naturally we will probably see a mild recession. Right. So at this point of time, too early to say there will be a recession or not mild. The mild recession itself is actually below the current expectations. So that could potentially happen as far as the US market concerns. We'll also see some of the other economies. Japan is now talking about increase in interest rates. We may see some risk coming out of Japan. The band which they increased earlier to 25 basis points plus or minus. Maybe they may probably look at it further in terms of increasing it. Such thing happens will have an impact on the currency market as well as global volatility actually. So in this context, our own belief is the rate hike cycle is peaked. Whether it gets into recession or something, we'll have to see. Maybe down the line 1 year, people start estimating rate cut start will coming in. I think 2024 already the market is pricing in rate cut will begin. Even India too, right now rate cut is not being considered. I think down the line 6 months, India will start assuming the rate cut cycle could begin. Maybe the cycle, the way I see is the way rate hike cycle came in about 18 months period, and rate down cycle will not happen so fast, because at the end of the day, some interest rates being at certain level is also good for the savers point of view. Right. So if they will not come to the zero interest rate kind of policy, sure, will probably take a median path, and therefore accordingly they may consider the rate cut in the 2024. In these kind of cycle expectations, since the market is driven by not by 1 year outlook, market is always driven by beyond 1 year. Sure. So how the market will see it will remain as a still remain interesting to watch in this kind of market cycle, how it moves.
So at this point of time, you think markets have not fully priced in the expectation of price cuts coming in for the next year, and with that you expect markets obviously to rise once they kind of factor in that there is a potential scenario of rate cut because that will lead to more inflows. So do you expect the valuations are lofty. This brings to the narrative again that the valuations are now expensive. You expect with all of this in the background, the valuations also to go up?
See, valuation is the function of what growth expectation is. So, valuation is a function of how the growth expectation. Second is the money that is coming in. If the money flow will rise up, ultimately valuation gets corrected.
Right.
So, I think India has already been seeing a time value corrections.
Okay.
I think we have been remaining flat almost for the whole of this year. Market has not given much return.
Okay.
So, even if market go through a time value correction with the fundamentals of the economy being better, so time value corrections always is good for market doesn't get into any kind of bubble kind of situations. Okay. I think down the line 1 year on the base of the earnings growth that is coming in plus the time value correction, you will also get to a buy zones. So, from overseas investors point of view, that could become one of the part of consideration. But that I think we go through this cycle. But my own belief is the growth momentum as we go into the election in 2024, we will probably see a big push coming for even for the growth momentum to come for the economy as a whole. And whatever the PLI schemes our companies have availed, that earning starts coming in the 2024. I think we will get into those kind of cycles.
Sure. Also, from a very equity markets point of view, we've seen small cap index not doing too well in the last year after 2 consecutive years of positive returns, right? Do you expect the small cap index to make a comeback in this year? I'm sure you don't have a very bullish view when it comes to the equity markets overall, and you would need a strong participation coming in from the small cap index also to have a bullish run out there. But with this in the background, you think it's the era of index investing like we had in 2020? 2 questions technically posed to you at this point in time.
So, the way I see is, small and mid cap will remain one of the asset class to be owned. The reason is, today we are talking about 3.2 or 3.3 trillion dollar economy. It will become $5 trillion economy, then we are gunning for $8 trillion economy. I think as time progresses, we will keep rising our targets in terms of what will be the economic size. Equity market is a function of it's one-time equivalent of the economic size. Therefore, equity market should also become $5 trillion economy, $5 trillion market cap, $10 trillion market cap over a period of time. If that remains, that such a large market cannot come without the participation of small and mid cap. As simple as that. Therefore, small and mid cap will remain one of the asset class to be owned in the long term. Short term, we will probably see sometimes they do get punished. I think after 2018, 2019, small and mid cap got punished because of a variety of reasons. Interest rates were high and variety of reasons it got impacted. And this time, of course, they are done better than the broad market also. So, this is a cycle which we go through. My own belief is every 3 years we go through this cycle. But if you have to take a 10-year cycle, small and mid cap would have probably given much better return than the index or any other funds. That's the way I think one has to see
Have
it.
I got that right when you say that small cap and mid cap index go through a 3-year cycle and the cycle has just begun, which means if the small cap index is not doing well for the last year, there is a high probability that the coming 2 years also the index will not be doing too well?
No, I think index, ultimately the participation I am saying. I think index is only one way of measuring the success.
Sure.
But the number of companies who could potentially participate, because there is a pretty large investment universe is there. Large number of companies listed in the space. There are many companies are doing relatively better on many areas, whether balance sheet strength or the product in which they are there, or the way the companies are delivering performance in terms of financial numbers, and all those things are actually getting better. I think you will see reasonably good outcome coming in the small and mid cap, but your time period has to be longer. So, you cannot take and measure the success of small and mid cap on the basis of 1 year performance, 2 year performance, then you will make a mistake. I think even investors will make a mistake on that. Therefore, you have to take a conviction in the long term. As far as index investing concern, so index investing will remain one of the complementary approach to the normal investment that we make. So, I always believe that active and index investing both will go hand in hand. Sometimes active will do better than the index. In market, if I expect small and mid cap to do better over a period of time, then naturally money manager ability to outperform the index will not be a difficult task. At the same time, index is something which gives you lazy way of investing. At the same time, money managers simply replicate the index stocks and with the index weightages. That also will coexist.
So the passive index investing strategy, if they may so call it, do you think that will still be in vogue in this year?
Yeah, it will be. at the end of the day, from whenever whenever there are many, you are not able to find an answer to something, the best way to take actually is take neutral approach. The neutral approach actually have something active, have something in the passive. So that's where I think will go. And I believe then over a period of time, the coexisting will rise, and wherever you are underinvested, you make it neutral. Therefore, some money actually move to the ETF and index funds, and then you will suddenly realize active funds have done better than the index. Then you will have some allocations here. This is a cycle in which every market goes through. Therefore, my own belief is not the question of whether this is right or that is right. I think my belief is, I think both will have to go hand in hand from an investment point of view, coexisting, I call it.
Fair enough. Let's get on to the rapid fire round where I ask you 10 questions. These are going to be really rapid. You have to answer them really quickly. We have 15 to 20 seconds each on each of them. Let's get started on this one.
Sure.
Your alternative career choice, if not for the CEO of an AMC like this. Don't tell me it's going to be a stock picker or, for that matter, a portfolio manager, which you've already been, but something else over and above what you've been doing.
I can get into the agriculture farming.
Really? Okay, all right. Okay, will this year be preferred as an asset class? Would you prefer debt over equities? I guess your answer already is that you would prefer fixed income gold for that matter as compared to equities.
Exactly.
Right?
Exactly.
I think I kind of nullify that question at this point of time. Your inspirational quote that you keep in mind while managing investor wealth.
So keep doing things right and don't worry about the surroundings. And as long as you keep doing things continuously to bring the best outcome, and that the belief system, 5 systems. So that's what I keep as a principle while doing many things.
Okay. Also, Mercedes-Benz CEOs have said SIPs are a competition to the luxury growth segment. What is your view on this one?
So in fact, he has made people to realize 2 things. One, you can buy Mercedes car by investing in SIP. And in a way, he has promoted SIP as a concept and increased the aspiration of every citizen of the country to make them aspire to own Mercedes by investing in SIP.
That's a goal-oriented approach of SIPs, as they so call it.
Exactly.
Okay. Also, summarize your 28 years of experience in AMC business in just a sentence.
So it's been a great journey, given the fact that one, industry has grown, we as an individual grown, we have been participating for the industry growth.
One sentence,
Yeah.
just one sentence, and 28 years you summarize in that sentence.
And I work with continuous passion for the industry, which has got a great future.
All right. All right. Also, let's talk about your work-life balance, right? Because I think as a CEO of this big AMC, there is a lot of stress that we all at the leadership levels will have to face and are facing. How do you manage?
See, I don't differentiate the work and life differently. For me, work is life, life is work. And for me, there is no personal or professional. Everything go hand in hand. And you have to give long hours from a point of view of...
How long are these long hours?
14 hours if you have to give. You have to give, given the fact that one, we are the business of managing public money. There is a fiduciary responsibility that we have. At the same time, you need to give the right level of, bring in right level of involvement in everything that we are doing. Therefore, I don't differentiate between you are at home, therefore you can't do this. The office work, you are in office, you can't do other things. And for me, everything goes hand in hand. The question is, how much proportion of your time is spent towards building your business? For me, work is a worship. Therefore, you worship something which gives you the joy and also the greater level of involvement and satisfaction. Then stress levels automatically is taken out.
Just going to ask you that as a question. How do you manage your stress? What's your stress buster?
Of course, one, you have to enjoy the work, and second is can't worry about...
Yeah, sure. We continue to work with passion as an individuals, but over and above that, how do you mitigate your stress?
No, the way I do it, one, of course, I don't bring in too much of worry in my mind, given the fact I know every day is a new day, everything is new things. We can't say the world will die, world will come down. So if you keep worrying about the surroundings, naturally your stress level will be high. And whatever is happening is always happening for good. So if you have that 5 systems, then naturally your stress level will be low. And last, of course, least, not the least, is about do some kind of spiritual activities, some meditations, and do good for others, so that you have the feeling of other people are happy, therefore you're also happy. So, and keep seeing smiling face within the organization and meet people, and keep yourself smiling as well. Keep yourself energized, motivated, and all the time, and so that your stress doesn't come out and affect others. I always believe if your stress levels are high, you're able to see it in your face, it does impact others as well. And that's something which I generally avoid, that whatever happens, your face should never reflect your worry.
Fair enough.
Yeah.
Any global or Indian CEO, or for that matter, any market leader that you really look up to?
See, global CEOs, of course, I do always admire about Steve Jobs. For one simple reason, one, his dressing style is very simple, black and black, so that you don't need to go and search which
just like mine right now, with the complete black attire.
Yeah, correct. Which shirt to wear, because I am actually always in white attire. So that's very simple, I follow him.
I agree.
And second, of course, he always think that customer will never tell you what he wants. And therefore, you have to actually create something which a customer will feel good, oh wow, is good. That was something which I am quite inspired, that whatever you have to do, you have to keep doing things so that the customer gets benefit. As for the domestic concerns, of course, I generally, I don't have any role models, but at the same time, I am deeply inspired and reasonably think that one should follow him, is our own Prime Minister Narendra Modi. For one simple reason, keep doing things, work for 14 hours to 15 hours a day, and drive 24/7 on a 360 days basis on multiple things. That's something, if all of us are able to do it, and we are here, we have the energy, we have the wherewithal to run around. Therefore, it's something which he, as an individual, many times I believe, when he himself can drive the country so efficiently, why can't we?
Yeah, you're just driving an AMC at the end of the day, which is of magnitude at this size. But thank you so much for taking out the time and joining us. It was indeed a pleasure chatting with you.
Yeah, thank you. Thank you.
1st of February, all eyes will be here. What Finance Minister Nirmala Sitharaman says on taxes, subsidies, growth, education, health, crypto, global factors and domestic recovery, every word will be crucial, every word will be analysed. But don't worry, Moneycontrol got your back. Our team will be interpreting every aspect of Budget 2023 and how it impacts your life. What's becoming more affordable? What's becoming more expensive? What are the stock recommendations and expert views? Real-time, minute-by-minute coverage. Hop onto Moneycontrol to have it all. Moneycontrol, the only digital channel to non-stop live stream budget coverage for over 12 hours. Join our experts, analysts and editors from 7:30 a.m. onwards on the 1st of February. Think budget, think Moneycontrol.